Good evening. We're just going to take a quick look at gold, and we're going to be looking at it on a monthly basis. So you can see where we started the move up, October, November 2008. Up we went to 2000, down we came through this 61.8 fib, which was at 1154, and we based out around the 1040 area. Now since then we've made a steady climb higher, but look where we're just about coming to. We're coming to the Fibonacci 38.2 resistance, and we've taken that from the top here in 2011 to this base, so you can see it coming in just there. So that's why there's been all this hoo-ha about 1380 providing really good resistance, and that's why, because of this 38.2 fib. So we're going to expect some selling pressure over the coming couple of days unless we break and hold above 1380. We can see that we're just a little bit overbought on the monthly charts, a little bit on the RSI. So let's take it down to a weekly chart and see if we've got any more. Still a little bit overbought. Now what we've got here is diversification. All right, now this is when your indicators go away from the price. This has not made a new high, this has not made a new high, yet our gold price has. So we must be careful. Okay, we don't want to be long up at these high levels unless we break through 1380 if we can, and to be honest, that's not looking like we can, and if we do, not sustainable. You want to be taking profits pretty quickly. Okay, so anything up to 1395, 1400, I think is going to be the knee-jerk reaction on a break of that 1380. So please take care and don't rush in to buy. You're probably better off waiting from this 1380 area for gold to come back around about the 1334 to 1325 support and buying it there. So what I'm going to do now we've got the weekly view, I'm just going to take you to see the daily chart, and we can look at that and say, right, so where are we in conjunction with the weekly? Where do we stand? How different are we? We're different in so much as we've just double topped on these. That one is higher, so we're not showing so much diversification on the daily charts, but the weekly charts, they shouldn't be ignored. We should keep our eyes on them, and even though gold looks to be a no-brainer on longs, please be aware that you have got this 1380, and if we don't break it, we're going to see a decline. Now if we go nowhere and spend the next couple of days going sideways, we should ease these indicators, giving us an opportunity to go back into longs and look for this other break, not the first one, but another break of 1380. And if we can do that, we've got two intersecting trend lines coming in at 1426 and 1428, and I think that's where the market will head for. How long do I think it will take? Well, the way gold's been going all of this year, I don't think it's going to take long. We had this sideways consolidation area, and we did pull back, we did break through 1200, and since then we really have had some good moves to the top side. I don't see that ending, I don't see the trend ending, but I do think you're liable for a correction.